Cebu Landmasters, we build with you in mind. At the heart of everything we do with you. Cebu Landmasters, we build with you in mind. You dream of a place for you to own. We build a place for you to call your home. Hand in hand every step of the way. Know that we're here to stay. With hands-on service right from the start. Leading you always straight from the heart. We built to make your dreams come true. What we do is all for you. Cebu Landmasters, we build with you in mind. Cebu Landmasters, we can live the better life. We're at the heart of everything we do with you. Cebu Landmasters, we build with you in mind. One slice, reach you face to face. Welcome hands, guide you at every stage. We want to see your dreams come true. What we do is all for you. Cebu Landmasters, we build with you in mind. Cebu Landmasters, you can live the better life. We're at the heart of everything we do with you. Cebu Landmasters, we build with you in mind. At the heart of everything we do with you. Cebu Landmasters, we build with you in mind. You dream of a place for you to own. We build a place for you to call your home. Hand in hand every step of the way. Know that we're here to stay. With hands-on service right from the start.
Good morning and thank you to everyone for joining us in today's call. The full year 2021 Cebu Landmasters Investor and Analyst briefing will begin in a few minutes. Just a few reminders before we start. Participants will be kept on mute as we are in a webinar format. You may type in your questions in the Q&A box provided at the bottom of your screen. These will be addressed after the presentation proper. Thank you.
Welcome
Welcome everyone.
Welcome
to the online launch of Mantra Residences.
Masters Tower Cebu.
to Mira High CDO, Abaca Resort Mascate.
Casa Mira Homes Dumaguete.
Welcome to the first ever Cebu Landmasters home class.
Asamira, more for the Filipino family.
Residents, you know how much CLI really values you, and this is just one of our ways of showing that.
It's the first of its kind. This project really is way up there and probably is our most meaningful one.
Feel that it would be a tremendous honor. It only shows that hard work can lead you to a lot of good achievements, and you can only attribute this to our team working together.
The best developer, Visayas. For the best developer, Mindanao category.
And the winner is Cebu Landmasters Incorporated.
Our next Top 10 Developers Award 2020 and 2021 goes to Cebu Landmasters Incorporated.
We want to say thank you, Iloilo, because we'll be here for a long time.
In the end, there is only light left. I got you on my shoulders. You are the one that we need. I am the one to struggle over the highest mountain. Let it be some achievers. Let it be some achievers. Reach your face to face.
Good morning, everyone, and welcome to Cebu Landmasters Full Year 2021 Investors and Analysts Briefing. I'm Grant. I'm the CFO of Cebu Landmasters, and joining me remotely actually is my good friend and my partner in business, Franco, who's joining us remotely for this analyst briefing. 2021 was our second year into the life-altering pandemic event, but I think the theme and the key message that we would like to share with you is not only how your company adapted very fast and responded to the very rapidly evolving conditions that the market has presented to us. We never stopped working, we never stopped creating value for the shareholders, we never stopped selling, we never stopped launching. Not only because it's good business, but we are always aware of our primary function and role in our communities and society, and that is as a home builder. Visayas and Mindanao continues to have persistent underserved housing demands, and we believe that this is our role and this is our identity, and this is where we can create value not only for our fellow countrymen but also for all our stakeholders, including our investors. So let me begin
Hi everyone, and thank you
Morning.
again, Grant. Great to finally meet our investors, supporters, and partners tuning into our full year analyst briefing. It was just like yesterday when we spoke to you last November. Watching that 2021 recap video made me a little dizzy. I cannot believe how busy we were last 2021, and I also I'm very grateful how blessed we were, our people, our stakeholders were. I guess 2021 was really a year that inspired us very much. At the heart of it all was really the 500-year celebration of Christianity in the Philippines, and we all know that Cebu was a big part of that celebration. I think that characterized the meaningfulness that we carried throughout the year of 2021, and it extended up to this very day. You know, I was talking to my team. I think most of the members of my team were on a plane every week to start 2022. So investors, analysts, were very, very happy to be seeing you because there's a lot of good news here. And I believe the good news we share reflect not just Cebu Landmasters, not just the VisMin, but I think there is renewed optimism. But in Cebu Landmasters, the renewed optimism is accompanied by very strong fundamentals and very good results. So we'd like to start the briefing by giving you a summary of our performance in 2021. Somehow, our press release came out just a few minutes ahead of our briefing, but you now all know that we have a record-breaking performance in 2021, 42% growth, recording 2.61 billion in net income attributable to the parent from 1.85 during the 2020 height of the pandemic. What's more impressive is that our earnings has already surpassed the pre-pandemic levels, not just by a percent or a single digits, but by 30%. I remember very vividly that our 2019 NIAT was around 2 billion, and we are way past that. So secondly, there's outstanding top-line growth. We actually exceeded our own internal expectations because we recorded 11.162 billion of recognized revenues from only 8.3 billion in 2020. Another very good thing to note is that unrealized revenue grew 23% year on year to 25 billion in 2021. As you know, this unrecognized or unrealized revenue will be recognized as we put in more accomplishment with the percent of completion, and of course the collections from our accounts. 3, robust sales take up. You know, we're just so honored, so humbled, because maybe when we did our IPO, we were doing 3 to 5 billion in sales a year. That was in 2017, and that was a lot for us already. So you can see us as a company that has really remained very committed to what we told our shareholders even back then, that we would grow, that we would invest your money wisely in the correct strategies, in the correct activities. So our expansion across VisMin has really propelled this sales, because you're seeing sources of sales from different geographical areas, several underserved geographical areas. And here you are, a developer like CLI, who's very immersed in these locations, being homegrown, not just taking advantage of the opportunities, but delivering more than it. That is more than what is usually expected. Number 4, solid and healthy balance sheet stands at 66 billion due to significant construction progress of real estate projects and continuous build-up of recurring income projects. We reached the $1 billion asset mark last year, so this has continued to grow, up 33%. 5, continuous expansion across business units. Right, we are at 90 projects, so 10 more grant before we reach a big 100, and there is no stopping the company. We are so motivated by not only this performance in 2021, but by the warm reception in our various VisMin locations. And we're adding new sites, new locations in 2022. 6, as you all know, if among our analysts or among our attendees here, for those of you who are CLI homeowners, you know how much and how well we take care of you. And this will extend to, of course, our investors. Ever since 2017, we've consistently declared generous cash dividends. Cumulatively, Grant, I think you're showing that later. But this year, from a pandemic year to 2021, our dividend is 33.8% more. So 0.15, but if you add the cash, the stock dividends that we did, it's equivalent to 33.8%. So that the record date is April 2022, payment date of May 17. So all in all, 2021 was really a year that proved to us that we want to continue what we're doing, but it's not enough to do so. In 2021 was a year also where we tweaked on many things. As a real estate developer, it's not just about the construction. There are a lot of operational efficiencies, operational requirements that need to be looked after. As simple as how fast we take care, how fast we give commissions to our brokers, to how well we update our banking partners, to how well we turn over the units, even to how well we give support to buyers who are affected by the pandemic. So I think you have a developer like us trying to champion all these different phases of the real estate cycle. So from this slide, I'll now turn you over to our Chief Financial Officer, who has a lot of good things to say about our financial performance. Grant, take it away.
Thanks, Franco. So I'm excited to share with you and to build on what Franco said. So let's dive a little bit into the numbers so that we could show you what underpins the performance. Our total revenues has grown 35% year on year, from 8.3 billion to now 11.16 billion. And as Franco noted, this is a significant milestone that I've been waiting for, where our performance has now exceeded pre-pandemic levels. So we're back, but actually we never really went away. The slowdown last year was simply a reflection of this reality on the ground, when construction sites and selling activities were hampered, but we never stopped. Yes, we slowed down, but we never stopped our operations. We knew what our commitments were, not only to our shareholders, but ultimately to our buyers and to each other. And we continued building the projects we are committed to, whose contracts and who have live contracts with buyers waiting for them. So what you see this year is simply a resumption of the growth trajectory that the company has been on for the last 5 years since the IPO. Those contracts have been with us and have never gone away. That demand is still persistently underserved in VisMin and has only grown bigger during the pandemic housing boom, frankly, resulting in a consolidated net income of 2.67 billion pesos for the group of companies, which is a 29% increase. But even better, this results in the parent net income, or CLI shareholders, getting 2.612 net income after tax to the shareholders, which is a 42% growth. And now, of course, I will hasten to add that that growth was greatly helped by the one-time tax expense adjustment from the CREATE law implemented in 2021. But I will also add that without that CREATE law, we would have grown by over 30% anyway on a normalized basis. So yes, we're back. We've exceeded our pre-pandemic levels. We're back on that growth trajectory. The CREATE law greatly helped us because a lot of our collections are in the future. But even without it, on a normalized apples to apples earnings, we have grown over 30%. Next slide. And here we'd like to show you that that growth is going to be sustained for the next few years, for the foreseeable future. Because even as we recognize this amount of revenues this year on our balance sheet, you could see that our net unrecognized revenues, revenues that we have yet to put on our financial statements because we still have to collect the threshold, because we still have to deliver the units, actually increased by almost 5 billion pesos. So this is a net increase to those reservation sales or to that unrealized revenues. And what this means is that, yes, we are growing our revenues, but we are also growing our real-time current market impact and the demand for our products. 44% of that came from our economic housing model, which is Casamira, our flagship model. And this is a reflection of how strong our sales were from projects that we launched 2 or 3 years ago, whose revenues we are now recognizing on our financial statements. Cebu continues to be a main driver of the revenue contribution. But looking into the future, and this is what I really like about our industry, and particularly this is maybe a little bit more unique for CLI because so much of our business is in residential. I have very clear visibility of what my financial results will be in the next few years. Why? Because we see here that we have achieved another record-breaking year of reservation sales. So this, for me, is a true indication of how strong your company really is operating in the markets where we are. That even during the pandemic years of 2020 and 2019, 2020 and 2021, we actually had consecutively increasing years of reservation sales. In other words, we kept serving more and more demand, even though the conditions slowed us down. We were, in fact, discussing internally in the company. We know we could have blown these numbers out of the water if only the environment had allowed us to, if only government officers weren't on skeletal workforces, if we could have more public events, if we could actually go out and make the sales events. But nonetheless, we achieved this type of double-digit growth for you. And you can see where the trend is, and it's very encouraging. Whereas in 2020, majority of our sales came from the economic housing segment, showing where that demand really is coming from, the bedrock of that demand. Look at our sales for 2021. It's now more broad-based, it's now more balanced. We now have 31% of our sales coming from the premier or the high-end series in Visayas and Mindanao, and 27% coming from the mid-market. So this means now that the real estate recovery demand in Visayas and Mindanao is now more broad-based, it's now more balanced. Across the economic spectrum, we've seen this type of balanced recovery of demand. And we're diverse. Our investment into areas outside of Cebu has begun to really bear fruit. You could see that last year Cebu accounted for 30% of our reservation sales, whereas over 71% of our sales came from areas outside of Cebu, Visayas, and Mindanao. And this is actually quite an achievement given that we only started going outside of Cebu about 5 years ago. Next slide. And so this is what our balance sheet looks like, dear shareholders and investors. Our balance sheet has grown to 66 billion pesos, mostly fueled by actual performance. So once again, when you see contract sales here increasing by 6 billion pesos, if you see investment properties here increasing by 3 billion pesos, and real estate inventory increasing by 5 billion. So these are the key drivers to our growth in our balance sheet. These are assets directly related to our core business. We're building houses that are being sold. We're acquiring land back for project launches. We are expanding into markets. We're expanding our footprint. We're capturing more market share in these markets. Next. And you might ask, to those who are observing, we have increasingly used leverage and debt in order to fuel our capital expenditures and our expansion. The answer is yes, we have, but we've done so in a way that mitigates the risk and where we've managed the debt risk prudently. First of all, we have stabilized our debt maturity profile. So you could see that on average, we've stretched out the overall debt maturity profile of our interest-bearing debt with the banks. There is no one very sharp debt tower that might put a liquidity strain on our funding sources at any one year. But more importantly, even as our debt equity has gone up to this level, which is still within the realm of what we can accept, our cost of debt has increasingly gone down. So I always say this, that even as I increase my debt and lengthen my debt, the banks and our lending institution, our debtors, has actually, on aggregate, decreased the lending cost. And I say this repeatedly: those who know us best, and that is those are our officers on the ground who see the projects that we are launching, are the people who always support us the most, because they see up close and personal the impact that we have on the market. And so that concludes my discussion on the financial performance of the company. You are free to download our full year annual report and financial statements that we're going to upload, if we have not uploaded it already, to the Philippine Stock Exchange. And I will welcome any questions that any of you might have later on during our Q&A portion. Now, allow me to turn it back to Franco so he could show you in pictures and in charts the projects that contributed to those financial performances. Thank you very much for your time.
Hi, Grant. So thank you very much for the clear and concise presentation about our financial performance. So let's now move to our business updates. So as we've reported, 2021 was a very productive, very busy year. At CLI, we're very proud of our acquire to develop approach. We've always been talking about this for the last 5 years, that whatever property we acquire, it always comes with a development plan in mind. And yet, we are still acquiring various prime and ripe land bank to keep our pipeline very healthy. So we've acquired 41 more hectares. These are a combination of prime urban areas and subdivision properties as well, including townships. So we've developed we developed 29 hectares of this last year, and there are still over 70 hectares under negotiation. We were very fortunate to have with us several joint venture partners. These are usually landowners who seek the expertise and local know-how of a developer like CLI. So we're very proud to partner with these reputable landowners and successful businessmen. So these are around 30% of our usual projects and 70% as wholly owned. Next slide, please. So as you can see, this is a good reflection of how things have picked up in 2021. I believe this also is a similar trend in several companies in the Philippines. So from the reduced spending capex because of various restrictions in 2020, you can see us already spending more than our 2019 levels. So these are mostly in investment property, land acquisition, and residential development. When we say investment property, these are the recurring income businesses that we are growing very significantly, from our mixed-use projects to some retail, some hospitality. We feel that the timing for us is very ideal because everybody wants to come back to the Philippines. Most of our new hotels are also opening 2023-24. Next slide, please. So as you can see, this comprises the 90 projects that are in different stages of construction right now. And for several of you, our dear investors who have been following us, we're very proud that we've invested and chosen our projects very wisely. We've built up a beautiful portfolio that is very robust, very diverse, and this really motivates us to look at more opportunities in 2022 and beyond. Next slide. This is just a snapshot of our residential performance, the residential business. Recognized revenue, as we reported, is 11 billion. It was higher than the 10 billion I thought we would achieve, same as Grant. So this is very great for us. What we launched last year bucked the trend. I know this for a fact because how were we able to launch projects in 2021 when on average you need at least a year to 2 years to get the needed permits and design permits for a project? The answer, we never stopped in 2020. We kept pushing, and that is really the answer why we were able to launch over 18 billion worth of residential launches, 57% more than the previous year. And that is what produced 16.5 billion of reservation sales take up. I'm very proud of our sales support team. As you know, CLI has 0 in-house sales agents. The purpose of our sales team is to support the various brokers and agents who are working hard to help their friends or their customers realize that dream home. So that's been an amazing record for us, and we were reporting that we're targeting even 20 billion this year, 2022. And we are practically 89% sold out across all stages. I'll round it up na lang. We're 90% sold out across all stages. So this is just a good snapshot of how it's progressing from launching to completion. Next slide. So just quickly on this, I think this is very important to highlight. It's good that Grant pointed out that in a span of just 5 to 6 years, 70% of our residential launches are not in Cebu anymore. 70% of it is in VisMin. So you can see our first condo in Iloilo, which is already 82% sold. A new project in Bacolod, already, which of course is that's 18% sold in 2021, but we just recently had the groundbreaking for it. It's already 90% sold in the first tower, and we reported it. You can see 6, of course, more projects in Cebu, our home court, as we say. We launched in Ormoc, and we launched our first beach town, which caused a stir because it sold 92% in just a few weeks. And you can see our very successful Delmiro Heights CDO. Cagayan de Oro is one of our most exceptional markets. 5 project launches, 5 sold out projects. That's why my issue now is I need to launch a new project in Cagayan de Oro as well. Next slide. You can see our construction in progress. Everything from high-end residential to economic housing to hotels. That's over 24 projects in construction. That's already 93% sold across. This is a very important statistic because 2 years of the pandemic, still 93% sold. That shows stability. That shows our organizational responsiveness, taking care of the buyers, taking care of accounts, delivering on time. And that's allowed us to maintain this kind of performance among our ongoing construction projects. Next slide. Okay, of course, as you know, our completed projects are healthily at 97% sold and up. One of the projects very proud of in Davao, Mesa Tierra Garden Residences. It was finished in just 3 years and a half, when the average completion time of condos in Davao is 5 to 6 years. So that is a feat in itself. So next slide. Okay, in terms of leasing, this is where, as we said, CLI is beefing up. We already are close to 30,000 in leasable area. One of the bright spots here is our numbers were not dragged down because leasing is still a emerging part of our business. So we are not very exposed or vulnerable to this sector. As you know, occupancies dropped in 2020 and improved in 2021. So we are over 30,000 in completed GLA, and we have almost 50,000 more in under construction GLA, and over 300,000 in GLA under planning because we have these new townships coming on board. And we're just very thankful for the timing we have on the leasing side. Next slide. Okay, so these are our projects. The 5-star green building rated Latitude. Check it out. Somebody told me it looked like Singapore in Cebu when he saw that building. So you can see us with good tenant mix. You can see Astra Lifestyle Mall. This is really our first major mall, and that's being built at the heart of AS Fortuna in Cebu. So we hope to see you there. Now in CLI's first major mall play. Next slide. And we still garnered new leases from banking institutions. We're now talking about hospitality. We've completed 180 rooms so far from Citadine Cebu, but there are over 9 projects in different stages of construction, which will give us around 1,775 keys. These are the best brands like Sofitel Cebu, Mercure Cebu Downtown, Radisson Red, 4 properties with Ascot Group, our first co-living brand called The Pad, and our first, I would say, mountain resort concept in MagSpeak. Similar to leasing, we're very fortunate with our timing here. Citadine Cebu has bounced back very strongly. Occupancies have increased, especially by now. We have tourists coming back very strongly in Cebu. It's one of the only, there are probably just 2 international brands in Cebu City. Marco Polo and, no, 3. Marco Polo, Radisson, and Citadine Cebu. Well, there are several in Mactan, but there are only 3 in Cebu. You can see the advantages we already have by just having a few of those. And you can see here that most of our hotels are opening 23, 24, 25. And we expect really tourism to return with a vengeance across the Philippines. And this will definitely boost the economy, boost labor and employment as well. Next slide. So estate projects. These are 3 estate projects we're very proud of. You all know about Davao Global Township that was in the news recently. It's already near 100% site development. It's the best of the best among VisMin estates because really of the world-class nature of our design and specifications. We launched our very first residential project there just last month, and we sold 4 billion in 4 days. That was also record-breaking. And please Google Davao Global East Village. And you can see even pictures of people lining up 2 nights before our scheduled launch. No, it felt like people lining up for iPhones, but these were people lining up for the best township in Davao. And we're very humbled by the market response. So you can see this is Davao Global Township. It's just 30 minutes from the Davao International Airport. Phase 1 includes commercial lots we are developing, the city center, cultural center pavilion, and the East Village that is 100% sold out. As I said, 4 billion in 4 days. Great news, not just for us in CLI and our investors, but great news for the market. The market is there. We are 110 million population, emerging middle class. And people are really looking for a great package, of value for money, location, and a good developer. And I believe that's what we really bring to the table. Next slide. So you can see Arming Mori, which is really a long-term project. We are the only reclamation project outside Luzon to receive a notice to proceed. from the Philippine Reclamation Authority issued in October 2021. And we also announced last year that we increased our stake in 80%, seeing the great opportunity of this long-term project, which have both great benefits to us and our investors, but also great benefits to the public. It's just 15 minutes from the new bridge that's being built. So since the time notice to proceed was issued to today, there has been tendering for bidding for the different contractors that will be part of the project. And then we submit the winning bidder with final drawings, and we target to start by the third quarter of 2022. This will generate over 49 hectares in saleable land area for Mingmori, which CLI has an 80% stake. Next slide. Okay. Of course, this project is very close to my heart and our chairman's heart. Very blue-blooded executives of CLI. So the XU Masters on Campus is really our partnership with Northern Mindanao's most important university, Xavier. And they are moving their campus to Uptown, Cagayan, where they will have more than 3 to 4 times more space than their current campus. So as part of that project, CLI acquired 14 hectares of this adjacent property, which will be converted into a new township, but it will complement the university, creating a very beautiful synergy there. And I'm not sure if you've noticed, for those of you watching the UAAP, you will find the Cebu Landmasters logo in the Ateneo de Manila basketball team jersey. So we're very supportive of this mission. We're expecting to start land development here by the second half of the year. So please keep an eye on that. And for those of you in Cagayan de Oro, we're so excited to deliver this to you in the best way we can. Next slide. Okay, I'll do this part on significant milestones, then Grant will come in for the 2022 outlook. So next slide. So as you know, I was explaining how we were able to launch projects in 2021 because 2020 was a year we continued our pace, whether it was on lockdown or really by just being very hands-on in the operation. You have Masters Tower, the beautiful Abaca Resort, were all launched virtually, and we started construction on both sides. Next slide. Next slide, please. So here was our first resort living project, already 98% sold as of February 22. What we wanted to do, being Cebuano, was, usually the beach condo resorts in Cebu are so expensive, very luxurious. And what we wanted to do was how we can make beach living accessible. So we tried to create a mid-market type of beach condo resort, and we were right. We got the right, we got the market right, and it sold very well. And construction here is about to start as well. Next slide. Okay, so this kind of slide is something I'm very proud of, but can be quite can make us dizzy and excited at the same time. This is how our year went, in a way. We were adjudged the leading developer at the start of the year. We cornered almost 30+ market share in the entire VisMin progress. You can see here the versatility of CLI, from doing co-living, enhancing our economic brand, topping off of a high-end project. One of the nice achievements we did was actually this one. CLI donated 115 million public tenement condo. It's the first of its kind, and we're not just doing it like a tenement condo. It's really a great apartment, and it's about to be finished using precast technology. We are finishing this already by next month in Cebu, and we're actually doing this soon in Mandaue and in other cities around VisMin as well. Our way of giving back and supporting our different communities. So we ended the year with an opening of our Latitude Corporate Center, and of course, being adjudged as the best developer in the Visayas and Mindanao, winning 11 awards in the most recent Philippine Property Awards. Next slide. So as you can see here, we've really cumulatively declared over 0.15, 0.20, 0.25, 0.25 adjusted, 0.15. I would say it's in line with the generosity CLI has, not just for its homeowners, but also for its investors. But how can generosity arises because of good performance? That's why we're very motivated to keep improving year on year, so that we can take better care of our investors too. But you can also see here the cumulative cash dividend 1.18 already. EPS growing steadily, book value per share also growing. And we all know, where we are today. We feel that we want to let our results do the talking always. We are well aware of where we are, and as far as how we are appreciated by the market, and we're very motivated to work harder on that. You can see 3.95 times price to earnings ratio. I mean, that is a bargain in as far as investing is concerned. So this is how the shareholder value is coming about. Expect us to continue looking after this, making this one of the strengths of Cebu Landmasters. You can also see price to book value, 8.89 times. And Grant always has something to say about that. But it's really our results just exceeding year after year. And we're very thankful to you investors who are here, who can help us spread the word about the good news that CLI continues to do year after year. Next slide. Yeah, this is where time has gone so fast that we almost forget that Cebu and several parts of Visayas were significantly affected by the Odette typhoon. And this is where CLI has also risen to the occasion. Just 2 to 3 days after the height of the typhoon, we were scrambling for electricity, power, fuel. We said, we have some homeowners who have damaged roofs. Nobody was spared from 300 kilometer per hour winds. It's so devastating. So CLI, I remember we were in a room with our executive committee. We just said, let's fix it for free. Out of warranty, with warranty or not, as long as it's in a CLI project, we'll fix it. So fast forward to today, we've probably fixed almost 80% almost 100% of the roofs that were severely damaged. So you can all be proud of this as CLI owners and shareholders, that we really risen to the occasion to help those in need during this time. Next slide. Okay, so I now turn it over to Grant, who will report on our 2022 outlook.
Thanks, Franco. So we're not resting on our laurels, and 2020 was an exciting year, but again, this is just a year when we said we're back to hitting our stride, and we have big plans going forward. Those plans never went away even in the last 2 years. So 2022, which we have started very strongly, we want to launch 21 projects worth 31.5 billion pesos in market value. We're going to sell out substantially most of these projects, and starting with the East Village here in the East Village in Davao, this one, where we managed to sell 4 billion pesos worth of condominium properties in that city in a matter of 2 weeks. It belies the underlying strength that we have in the market, and we're really excited to launch all of this because these are all projects with design plans, licenses, proper capital funding, and with letters of interest where we've done the market study. We know how strong the demand is. We know where to deploy capital to make sure that it generates a good return. I'm excited about the beach town that you said, Franco. I could imagine like a little Miami vibe there, or a beach town vibe that we really, that we're in prime position to deliver this condominium project in the heart of Cebu, beside in downtown Cebu, and all these other projects that we're launching as well. These are all very exciting projects where we've done the due diligence. We know it's going to perform. We know it's going to contribute, and this will lead to a very exciting sort of. We want to share with you our guidance for next year. So next year, we want to give guidance that, given our year-on-year growth, we're giving the market a guidance of 20% earnings growth next year, normalized, meaning that we taking away the effect, the one-time tax effect. We won't have that one-time tax gain anymore. We're still confident that we can grow 20% a year-on-year on our bottom line. So that's net income to parent, to continued growth for our shareholders. And again, if you've been following everything, it builds on what I said earlier, that this is an industry, this is a business where we're confident to give this guideline because the visibility of our earnings is so clear given the number of contracts and projects that we actually have on hand. Next slide. This is also the year where we're pretty excited to share with you the fruits of our investment in our sustainability practices. CLI has always been very strong in our ESG components, especially on the governance and social side. We've always been part, we've always viewed ourselves not just as a business, but we have an integral role to play in the communities we are in. We help the LGUs, the communities. We want to think we run our business well. But this is the year where we can actually capture those ESG metrics using globally accepted standards, such as GRI, the Global Reporting Initiatives, the Sustainability and Accounting Standards Board, and International Integrated Reporting Council standards. We cross-reference what we were already doing in the past few years, and just made sure they're presented in a clear and thorough manner for our investors and to those investors who have been putting more and more importance and focus on ESG. So we want to be accountable on ESG. These are the 5 pillars of our ESG accountabilities: economic, environment, social, and governance. I won't need to go through all these details. There are a lot. We do a lot for our society and along the ESG axis. And I invite you to read this story. It's a great report. We show everything from our energy, water, and waste consumption, all the way to our gender diversity, the economic value we're creating, not just for stakeholders, but for the communities that we're involved in, our good corporate governance metrics. They're all here, and we're excited to share with you this integrated report that shows what we've been doing for the last few years. So these are from on sustainability. If you look at the United Nations sustainability goals, we've hit 10 of the key performance indicators of the UN SDG, from sustainable cities to gender equality to health and well-being of our stakeholders and our employees. I mean, all our employees are 100% vaccinated and boosted, by the way. So this is one of the things that has helped CLI really continue our operations and really have a running start out of the gates in 2022. And so that really concludes our presentation for our full year 2021 results. We concluded by sharing with you our outlook for 2022. We're off to a good start this year. We're ready to go. We know we have 9 months to go, and given if the first 3 months are any indication, the remainder of the year will remain just as strong. We look forward to renewed economic activity, to not only for CLI but for the whole country, and we hope that we can do this face to face very soon. So just again to highlight the key, and to summarize our key highlights there in front of your screen right now. And I think at this point, we'd like to thank everyone for their time and invite your questions on the Q&A portion. I see some questions already coming in, and it will be our pleasure to tackle them one by one. Okay.
Also, on behalf of our board of directors, on behalf of our CEO and chairman, Mr. Joe Sobrano, we'd like to express our sincerest thanks to all of you, analysts and our shareholders, for keeping track of us, and may today be a source of excitement for all of us. There's a lot of opportunity in real estate, and we want to be at the forefront, especially here in our turf of VisMin. And I just like to close this by, because we have a very good turnout today, almost 100 participants, and we hope that this has been good news for all of you. And if it necessary, Grant, there are some who might have joined a little later. Can we play our 2021 recap? So we can also relax our vocal cords before we resume with the Q&A.
Yeah, sige. We can ask our technical team to do so. Guys, please play it. Thank you.
Here's our 2021 recap, and then we go to Q&A.
Welcome.
Welcome, everyone.
Welcome to the online launch of Mantra Residences.
Masters Tower Cebu.
The Miralite CDO, Abaca Resort Mascate.
Casa Mira Homes Dumaguete.
Welcome to the first ever Cebu Landmasters home fest.
Casimir, more for the Filipino family.
Our residents, you know how much CLI really values you, and this is just one of our ways of showing that.
This is the first of its kind. This project really is way up there, and probably is our most meaningful one.
Feel that it would be a tremendous honor. It only shows that hard work can lead you to a lot of good achievements, and you can only attribute this to our team working together.
The best developer desires. For the best developer Mindanao category.
And the winner is Cebu Landmasters Incorporated.
Our next Top 10 Developers Award 2020 and 2021 goes to Cebu Landmasters Incorporated.
We want to say thank you, Iloilo, because we'll be here for a long time.
In the end, there is only light left. I got you on my shoulders. You are the one that we need. I am the one to struggle over the highest mountain. Let it be some achievers. Let it be some achievers.
Love that.
Okay.
I greatly produced video. Sige.
So we can start.
Okay, we can now start with the Q&A. Will our team facilitate? Yep.
First couple of questions, no. And I'll answer two questions. There's a question from Mr. Mark Brown about a REIT in the future. And in the chat box, I saw someone asking us about our recurring income targets and when we'll start generating more. Mr. Or Miss BG Kabuag asking when we expect our recurring income segment to significantly contribute to our profit or our performance. So I'll answer these two questions simultaneously. We expect our recurring income portfolio, which was held up a little bit during the past 2 years of pandemic, their startup operations were held up a little bit. We expect them to contribute significantly in 3 to 4 years' time, and to really ramp up by then. If you look at the pipeline of our hospitality project, especially, we are opening most of them in 2023 and 2024. So you factor in a little ramp-up time, a little soft opening until we really fully open all of these. We want to target at least 5 to 10% of our revenues coming from recurring income projects. And the answer to Mr. Brown's question about the REIT is absolutely. Our REIT is definitely in our plans, not our short-term plans, but our mid-term plans, I would say. Perhaps in the 4 to 5 year horizon, coinciding with the maturity of our recurring income assets. Just like anything that we do, whether it's offering a product to the house to the market or offering an investment to our investors, we want to make sure that we're offering a quality product that's been tested, that's been proven. And I believe this is a necessary requirement by the regulators with several years of track record. So while we have a portfolio of leasing and hospitality assets at the moment, what we'd like to do is we'd like to enhance and improve and grow that portfolio so that when we go out into the market, we have a quality REIT offering that can stand out and that offers something unique. It offers pure diversification out of NCR and Metro Manila. If you're in the property sector in the Philippines, we believe that this is an important asset you should have in your portfolio because all the BPOs are already investing in VisMin anyway to diversify. So why not the capital investors as well? So that's I hope that answers your questions, Mr. Miss Kabuag and Mr. Brown.
Yeah, maybe just to add a little bit on recurring, we're quite excited about the hotel portfolio that is really part of our mixed-use projects or with a few standalone ones located in the best locations in the city. You can just simply compute 1,700 keys, let's say a reasonable occupancy of 65% times average daily rate of 5,000 pesos. That's easily over 2 billion in recurring revenue in 2 to 3 years time, as Grant has mentioned. So this will come online quite soon, and it's our job here to develop these very well, so they can give their full potential as a recurring business.
Okay, thanks, Frank. Then there are a couple of very interesting questions. I love these questions from Mr. Michael Hilado. It shows he really understands, or there's a level of understanding the real estate business he has. So allow me to answer this. Your first question, Mr. Hilado, how much was CLI's canceled but not resold in 2021 as a percentage of revenues? Overall, it's about 4%. So we would have had 4% higher revenues without cancellation. But cancellations are a natural part of any real estate business, especially one with a pre-selling model like ours. Our peers in the industry, from Ayala to MegaWorld to SM to Vistaland, we all are operating more on the same pre-selling model where we collect on the contracts as before we deliver on them. We collect partially, by the way. And during that time, life happens, right? Life happens, and if there are cancellations, we process that accordingly and accordingly responsibly. The important thing to mitigate this risk and to give context is that our recovery rate is over 80%. And what we mean by that, it's a metric that I actually share with my managers and that I monitor very closely. over 80% of the canceled units are resold within a 12-month period. So what we actually do is we age the cancellations. We take a look at which units get canceled, and within, on average, a rolling 12-month period, how many of those get canceled. So despite the cancellations, we are still growing our reservation sales and our revenues. All of these numbers are net of cancellation. So I hope that answers your question on cancellation. The second is also a very interesting question because I think he understands that
I think
recently.
just to add on that grant non-reservation
Yeah.
sales, because let's say the second 16.5 billion of reservation sales from 12.5% the year before. These are all net of cancellations as well. In spite of net cancellations, is still that growth. The chart being a finance person, no? Like Grant, these are one of the best looking graphs you'll see now among real estate players because in a way these are healthy net cancellations, and 4% is very minimal because we're able to have those buyers who really have the capability and capacity. We want to point out again that we are usually, CLI is usually number one in best performing loans, not just in Pag-ibig, but also in several banks, home loan portfolios. So that's a good sign for us. And sorry, Grant, I cut you on your second answer. Sorry about that.
Yeah, as always, Franco, we're playing partners here when we answer this question. Now, the second point is quite interesting. I was saying that to those who've been following the real estate business to a very granular level, they also are aware that recently accounting standards have required us to capitalize most of the interest that we're incurring for the projects. And so that means interest cost is transferred from OPEX into cost of sales. So the answer there is 5%, Michael. Our gross profit margin would have increased or would have been a little bit would have been higher. So if you see the numbers a little bit lower, it's simply because of a shuffling or a rearrangement of how costs are actually recognized from an accounting standard. So it's about 5%. Okay, hope that answers the question. Franco, I think the next two questions are Q&A from Mr. Jason Escartin and Christopher Chua. I think that's right up your alley, would you say?
Okay, I can handle this. So from Mr. Jason, thank you for the briefing. Really excited about CLI's prospects. A question on Mingmori. Does the JV intend to sell land to other developers? If yes, any possible indication on how much of the land area is for them? Also to clarify, does the 2025 completion date mean the land is developable by the time? Or will it need to settle first for a couple of years before development begins? Okay, so our financial model or approach is actually the 49 hectares. There's at least half of that, or 24.5 hectares available for sale. And the remaining 24.5, we will keep for our own development or to lease, do a land lease. As you know, Minglanilla is really part of Metro Cebu. This kind of project is actually going to take the municipality from being a municipality to a city with the increased land area. So as we said, we are looking at this long term, and as you all know, the last real large scale reclamation in Cebu was the start of the millennium, no, in 97 to 2000. So we're very excited about how reclamations can be done more environmentally responsive, more equitable, more sustainable, and that's why we're doing it. So in 2025, it means that all land will already be 4 meters above sea level, which is the requirement in order for these to be titled. So this is the most compliant reclamation project in the VisMin area. All the papers are in order, and we're very excited. We also have received support from banking partners, and we're looking at the third quarter to begin. So the second question from Christopher Chua: how do you mitigate the rising cost of materials? So this is a very good question, and I will let you know our strategy. Our strategy is we'll never stop constructing. We have obligations to our clients to deliver on time and as promised. No specification will be reduced or downgraded because we're always able to deliver as promised or usually more than what is expected is our goal. So what we do is really spread out purchases, get this more in bulk, and of course there are slight adjustments on the top line, no, on the revenue side, because our projects already naturally affordable. Increasing selling prices minimally will help us recover. As you know, this is a very strange time, not just for real estate, but for many industries. Highest prices in steel. You have oil. So we see this normalizing. What goes up will come down. But as a developer, we're always scrutinizing. We're always looking at this very closely. And then it's really working with our partner suppliers, partner contractors, having this harmonious relationship with them so we can both support each other. I think that is where CLI does well. It's really in working hand in hand with the suppliers and contractors also. So that's my 2 questions. Back to you, Grant, for the next one.
Sige. When will the rollout be of Costa Mira Panglao? I think we might have an interested buyer, or we might have someone based in Bohol who's looking at this. So I think it's we want to share that this is another joint.
Yeah, so na taga Bohol dire ginasaya taga May. Yeah, it's launching soon. We are getting the remaining permits needed to launch the project. Supposedly within the second quarter. Latest would really be just crosses to June, July. So you can see we have not really revealed the perspective, but this is really just a ongoing draft. It's going to overlook Tagbilaran from Panglao. As you know, CLI will always put a premium on good design. So you can see this being not just a beach resort condo, but it's since it's very close to Tagbilaran, it can really be your home away from this, just home 5 minutes from the heart of Tagbilaran city. So hapit na ni. Okay, next question.
Okay. This one. Within Cebu, I'll take this one. Which market segment do you see having a strong demand in 2022 and in the next 2 to 3 years? Easy. The economic demand is going to be evergreen. Not just 2 to 3 years. We see this demand persisting and continually being there for us to serve in the next 5, 7, even 10 years. The backlog for housing has been there for several years, for over 10 years straight. So every year there is more demand than there is supply. So even when the time comes that there is now more supply than demand, we're only just beginning to serve the backlog. It's almost like asking, when will people stop having a family or getting married? Everyone will want housing, and economic and mid-market is going to be the key drivers of that. Premier is more opportunistic, so it is very strong. As you could see, we launch and we strategically place the Premier. But when we say it's more opportunistic, you have to choose the location. You have to time it right as well, and you have to have the right partners in order to make sure that you're serving the right market. But when it does, that opportunity presents itself like it did in Iloilo, like it has several times in Cebu. We'll be there and we'll know how to assess those opportunities. But it's that's how we view those different market segments. Okay, thank you for the question, Carla. Okay, from Mr. Norman Pena or Pena. You want to clarify the following. What's the effect of President Duterte's reclamation ban in Central Visayas? Okay. The second is, since interest rates are going up, and the third, with a levered balance sheet, how do you hedge against the rising rates? Franco, let me answer questions 2 and 3 first. No?
Okay.
Yeah, interest rates are expected to go up by third quarter 2022. And so how have we managed this? If you look at our debt profile, team, could you please bring up our slide on our debt profile? If you look at our debt profile, in the last 3 to 6 months, really, your team has begun to move to mitigate this risk by fixing most of our interest rates. So 68% of our loans are already on fixed rates. In other words, we won't wait until the yield curve or interest rates shoot up beyond what we projected it to be. What we were simply doing is we were making sure that we get the marginal savings on interest while floating rates were historically low. But we've always been ready to fix interest rates when we see them moving up. And yes, we have started to see them move up. We've started fixing majority of our loan rates now. It's at over 70%. And we plan to continue doing so in the next few months in order to mitigate and minimize the risk of rising interest rates. Now, you mentioned coupled with generous dividends instead of retained earnings to fund its expansion. Is there any plans for a follow-on offering or a share rights offering? Hitting two birds with one stone. So it's equity funding and lowering our DE. And that's actually related to your third question, Norman. No? How do you hedge against rising rates? Do we decrease dividends, SRO, FOO? Do we sell receivables and spread out maturity? Well, we've already spread out maturity. You can see that we've managed to push out more than 50% of our debt to more than 5 years. So that's very well managed, if I should say so myself. We are not going to decrease dividends. Dividends have always been a key part of our investor commitments. While we're not promising anything, we've always have a little humility and modesty to know that market conditions could change. We need that flexibility. I think historically we've shown our commitment to this. Besides, investors can always redeploy those dividends themselves by buying more of our shares if they wanted to. Now, very interesting question. Do I plan an equity fundraising through an FOO or an SRO? Suffice it to say, and I mentioned this, I alluded to this earlier, that yes, we're expanding, but we're not going to expand infinitely just by using debt alone. So are we planning any sort of equity play? The quick answer is yes. To those of you who've been keenly following CLI, we raised our authorized capital stock last year to over 10 billion pesos. We are laying the groundwork for that. Now, we do want to make sure that conditions are right, that we don't want to dilute shareholders unnecessarily at a valuation where we might not be reflective of the intrinsic value of your company yet. But we are not, we're already moving and making steps to address this. Just watch this space or follow CLI. We'll have some very interesting developments, hopefully for you in the next, I would say, 3 to 6 months that will demonstrate very clearly our strategy to address not only our funding requirements for expansion, but also addresses how we want to mitigate the leverage in our balance sheet. So again, I cannot disclose too much at this point. Just watch this space and follow us. But we know what your concerns are. It's been our concern as well, and we're doing something about it. And things are underway that we just cannot disclose in too much detail at this point. But
yeah, these are definitely very interesting insights and observations from Norman. And I'll answer the last question. If you would clearly follow the president's statement, he was referring to ongoing applications. Ours is already a finished application because we received the notice to proceed already. So it does not apply to Ming Mori. Ming Mori has everything from environmental compliance certificate, DNR area clearance, and up to the Philippine Reclamation Authority's notice to proceed. We've even paid fees already as part of our requirement to the PRA.
Okay, let's move on to the next question. There's I think Miss or Mr. Bayi Cabalias might have missed this. The mountain resort, we named it Max Peak. So definitely that's coming in Magsaysay Peak. It is in our summary of ongoing projects.
Yeah. It's under construction already.
It's under construction already. It's in the construction of it. So can you just flash that slide very quickly for BE here? It's an under construction project. So yes, maybe Franco, if you want to give a very quick construction update on Max Peak Resorts.
Oh yeah, just very quick. So for those of you in Cebu, you all know that during pandemic, a lot of us drove out of the city to enjoy our beautiful countryside. We're so lucky here in Cebu, and a lot of the areas that was very popular was Balamban. So as you know, CLI owns a stake in a company called Max Peak that's developing a plateau portion on Magsaysay Peak in Cebu. So land development is nearing completion, and we will start doing our villas. So it's going to be very beautiful. It will have an in-house brand developed by Cebu Landmasters. So see you in Balamban at Max Peak.
Okay, thank you. All right, moving on to the next questions here. I already addressed the question on cancellations in 2021. So it's actually held steady. It's a minority of our operations, a natural part, but a small minority of operations, which I feel we have managed. It has remained steady at the same pre-pandemic levels. It really goes to show yung pamamahay and housing. Our buyers have told us many times they'll give up everything else, travel, they even give up their cars, but not the houses. But the OFWs, you can ask them, what is your primary objective? Why would you go abroad, seek these greener pastures, and sacrifice being away from your family? And by and large, the number one answer always is pamahay. Gusto nilang magpabahay sa kanilang pamilya. They want to get this primary residence for the buyer. So the demand is very sticky. Even during challenging times, we will work with them in order to save the contract, and that has allowed us to manage cancellations. I believe the next question, construction costs, commodity prices have been answered by Franco, but there's a second part here. Will these be passed on to the buyers? I think it's not too much of a stretch to say that the answer there is, if they persist and they remain persistently high, eventually, yes. No business or all businesses are affected by basic commodity prices and fuel commodity prices. That's just a fact of our economy. We have held off on price increases as much as we can, and we will always honor the contracts that have been signed last year, 2 years ago. So, just like if you would go and fill up your fuel tank 1 or 2 days before gasoline prices go up, I would encourage the buyers, please go and really reserve and buy your units now, because this is not just CLI. I am absolutely sure every single developer and every business for that matter are already running the numbers, planning for a price increase in case the commodity prices and fuel prices continue to be persistently high. Okay. And I think I'll answer, there are several questions on our gross profit margins and our costs that are being asked in several questions. I think, Franco, it's worth us reiterating lang how we're going to manage this one. On the gross profit margin side, again, I invite you to look a little bit deeper because on our notes in the financial statement, but I'll reiterate that a large part of the decline in gross profit margin is attributable to the finance or the accounting standard which we adopted in full for the first time in 2021, which asks us to capitalize interest rates into cost of sales. So it is this shuffling of interest rates from OPEX to cost of sales that caused that shift in cost allocation as well, which lowered our gross profit margins. Going forward, we're always using this regime, this accounting standard. We are targeting a gross profit margin of 45 to 48%, if not better, going forward. Okay. But on the commodity prices and fuel costs, Franco, do you want to elaborate more on that or reiterate certain points about how we plan to manage our input costs in order to protect our profitabilities and margins.
Yeah, I think this is where CLI is, doing over 30 construction projects at any given time, right? One of the good things is we have several projects in completion, meaning we've already enjoyed the good commodity rates prior, right? So we have now new projects being constructed that are experiencing these unusually high prices. Our strategy is to always push forward. This will not, there is no slowdown in as far as our project schedule because that will be more expensive. And we're very conscious of our commitment to our buyers. As I repeated, one example, we have a very good partnership with our housing contractor here. They're building over 10,000 homes for us across VisMin. Because of our partnership, you would ask me, is he adjusting his unit rates? The answer is no. So that alone, in terms of house construction on the labor and contract side, that doesn't impact us. It's really about relationships, my dear shareholders, and how we also look after them, making sure they're supported, making sure that they deliver based on the specifications and the quality that we expect. And in terms of just general feedback, what's good with certain areas is raw materials or example cement. There are 4 to 5 cement plants in Cebu alone. In northern Mindanao, there are 2 or 3. These plants still continue to generate a lot of supply. So if there's a slowdown or hesitation from other buyers because of rising prices, we're there to take it, and that will help our pricing too. So there's a very big effort to, of course, monitor this. As Grant said, it will eventually be passed on, but I would say minimally to buyers. Now, if there is a certain increase in prices, but this is where CLI is ahead because our prices are already very value for money to begin with. Our projects, we're still able to deliver or offer condos at 100,000 per square meter. That's only 6,000 to 7,000 per month. What is an additional 500 to 1,000 pesos per month? It's quite negligible because the demand and the need is there. So ours is, we're very conscious that our margins, as we committed, will be protected. So it's in the cost discipline, the working on relationships with our various partners, suppliers, contractors, and then looking after reasonable adjustments in the selling side.
Okay. Yeah, I hope that answers your question. Okay.
There are many examples, but that's just a short answer now.
I know. Yeah. There are many ways for us to mitigate these risks. As Franco said, these suppliers and contractors have been our business partners for a long time. We took care of them during the pandemic, meaning, in VisMin, we were one of the few, if not the only developer that was really still giving business, making sure that they were operating. So, we will go through this together. They are business partners. They are our stakeholders. So we're very conscientious as well, I'd like to state, with how we nurture and develop business relationships, because our success is their success. And, a good economy and a good business will lift all the boats in that CLI economy. All right. So there's a question.
Maybe one good, lastly on that,
Sure.
One good observation or reality is, even if they're high, they have not gone higher. I think they've reached a certain ceiling, no? And for those of you in construction in the call, it's actually reached a ceiling. Steel prices have flattened. Cement prices have flattened. I think oil has also inching down again. So that's one good sign that we might be seeing an end in the, I would say, exorbitant rise in the commodities, no? Because it's held up.
Right.
Let's say it's been 3 weeks there. Yeah.
So actually interesting yan.
Last few questions, Grant, I think.
Inflation kasi usually is counter to interest rates with the BSP. So I'm looking at what BSP will do if inflation will really rise. I think interest rates might not go up as fast, but we'll see. That's something that we're monitoring and we're part of our risk mitigation strategy. Okay, yeah, you're right. Last few questions. Okay, interesting here. What is the target DE amid this high growth period for CLI? Mr. Luis Gregorio Francisco asks, and any initiatives to monetize the contract assets at a faster pace? Second part of the question. When you say monetize our contract assets, it means what it really means is you want us to accelerate the delivery of the unit to take and to take out and to do a takeout meaning to collect the payment from the buyers. The answer there is a big fat yes. We are of course always diligently delivering the units to the best of our abilities and where conditions will allow us. But at the same time, we have very close working relationships with the buyers, with the financing institutions, the private banks, their home loan departments. We have dedicated teams inside these banks working on CLI accounts. We're working together with the top officials with PAG-IBI to HDMF for those buyers who are using that institution. So the answer is these initiatives, we are not leaving the buyers to get financing on their own. We are proactively putting together special processes and accelerated processes to help our buyers get their home loan financing, which will allow us to monetize these contract assets. But the second part of the question, if you're thinking or if you're asking us about the prospect of CTS financing, there's no immediate plans to do that because it really, usually CTS financing is quite pricey and it sort of compromises profitability for liquidity. And for now, we don't really need to do that. Our target DE ratio is somewhere between 1 to 1.5. Now, our covenants are all at 2.5 with our banks. So just to share with you, so we are far, far away from where we get into any technical trouble or technical default on covenants that the banks might call. So we're not going to let it grow to more than 2 or not let it go anywhere near our covenants. But we'd like to achieve 1.5 in the long run. And then I think there's a last question from Mr. Mark Espino here that I want to answer. Cancellations are 4% of total bookings. Yes, they are. 4% of total net cancellations, meaning net of the resold unit. So the numbers that you saw on reservation sales and revenues are net of cancellations. Where was this in 2020? It was at 3.8%. So it inched up a little bit by 20 basis points. I'll give you a little context there. It's really economic hardships brought about by lockdowns and the pandemic. But I feel that we pretty much managed that. And the GPM decline, I did mention, it's mostly attributable really to the reclassification of capitalized interest costs to GPM.
Grant, just to small correction, right? In 2021, our cancellation rate actually went down to 3.74%. I think what's in the report is rounded up. So it's actually an improving trend, and that reflects also in the retention of accounts that we are seeing.
Okay. Yeah, you're right. Sorry, erratum lang, no? So it's actually, in 2020 was 4%, you're right. And it was 2021, that's 3.75%. So it actually improved because 2020, it ticked up in 2020 compared to 2019 and then improved to its steady state in 2021. Thanks for the correction. Okay.
It's also in our filing that you will see later in our 17 A form that is being uploaded as we speak.
Oh, okay. One final question, and before I invite, we thank everyone. The CLI have early loan takeouts for bank at 70% POC or percentage of completion. It's not CLI per se, but it's our partner banks. We don't do in-house financing, but we do have partner banks who are willing to give you a home loan even before 100% completion. Usually it's at 80 to 90%. 70% is pretty aggressive, but there might be exceptions with some banks out there who will accept it 70%, but it's pretty rare. Normally, they wait until more substantial progress completion, and our buyers are also waiting or wanting to see a more complete image before taking it out. Okay, so I hope that I think answers all our queue of questions. Franco, we answered quite a lot. I love it that our shareholders, our analysts and investors are engaged, that we had a lot of really good questions that allowed us to articulate and discuss our business and
Yeah.
our numbers.
It makes me very proud because our shareholders and analysts are really keeping very good track, and you ask all the right questions that we ask ourselves all the time as well. And as we speak, our annual report is proudly uploaded on edge.pse.com. I just checked, and one of the early ones, early submissions among listed companies. So please scan through our FS and let's have this little celebration this morning of the wonder results that we're reporting. So our CEO just really wanted to relay the excitement we have for 2022. As we said, time is flying so fast. We're on a VisMin tour. I think we're going back in Iloilo next week. And that's how we do things. We're really on the ground here. Real estate is a ground game. And that's where CLI is really very strong at. Once again, on behalf of our whole team, what we call our CLI family, we'd like to thank you for the time, for your support, for your appreciation, and please spread the good news about the results of your company. Thank you very much.
Thank you everyone for your time. We will continue. We look forward to the next briefing and we'll see you there. Franco, I'll see you soon back here, pare.